Hey guys, this is Brandon. Welcome to Fan Future, and I am going to tell you exactly what the one strategy, the one system, the one thing that you would need to pass challenges, to get payouts, to scale up your live account, to do anything and everything. It's all going to be based on this. And if you've never traded before, that's great. There's another video for you, and I'll break it down into very, very easy steps, right? But if you have traded before and you're just looking for a way better edge and some consistency, I'm going to fly through this strategy for you right now. Okay. So let me actually move this. Bang. So as we're going through here, right? You see, we have three different symbols that we can use. This is all futures right now. So futures prop firms are very, very cheap. You got your top steps, you got your Apex. You will want maybe 20 different accounts on Apex, and you would just want to pass them, right? To be able to pass them yourself. This is going to be a very, very easy, simple way to do so. All of these can be, all these entries that I'm mentioning can be set for alerts as well. Alerts can be set, right, for all of this stuff. So you can get a text message and it'll show up. All right, so I'm going to open up one of these first, and we're actually going to do YM. YM is really good. ES is really good. And gold is really good to pass them. That's why I have these three up here because they're not too crazy. But you can still get exactly what you need to get out of them, for sure. Right. So first and foremost, let me actually open up YM. Okay. So there are going to be three different things going on in here. Okay. I got two breakout zones and then another backup, which is a regression line that has a bunch of different calculations in at the same time for another entry type. Okay. For confirmation, we have an ADX down here, and we have top-down analysis from the 2 hour all the way down to the 1 minute over here. So all of this put together is going to give you very, very solid indications. You're going to have TPs right here as well, letting you know when to get out the market. And then also, um, you're going to see take profit levels here, right? That are going to follow along price, highest previous high, and then also some good markers letting you know where price has been before. This white line is at 200. And as you can see, when price crosses over it, the background is blue and we're buying. And then when it crosses under it right here, we're pink and we are selling in the background. That's why the background is pink or blue. And then that's basically it, right? So let's go to the gusto. We're only going to be trading during New York session between about 9 o'clock and about 11:30. Okay. Every single bot automation, anything that I've ever done has been best around that time with the US 30, YM, NAS, NQ, ES, SPX. And gold is a little different. It's best in the PM, but we're going to focus on YM US 30 right now, okay? So futures, if you're in Forex, this is going to be the exact same as US 30. The structure is going to be the same. Everything is going to be pretty much the same, except for the lot size. One contract is like 5 pips, right? One contract in futures is like 5 pips. And I mean, a 5 lot in Forex. Two contracts in futures is like $10 per pip in Forex. So we're looking at a 2 right here. We can turn that into a 1, and that's what we'll be doing. All right. So let's get into the strategy itself. Okay. What I know for certain is that based on what I've learned and what I've seen and everything, all the way on the highest levels, hedge funds and everything, they are looking for about 20 pips out of a trade. So I'm making a box right here that has 20 ticks so you can visibly see what that looks like. So this right here is 20 ticks. So let me label it if it'll let me. 20 ticks. Bam. So that's this. If you only do 20 ticks out of the day on a regular basis, 20, 25 ticks. Let's even go further and call it 25 ticks. You will be in great shape. Great shape, right? Let me actually make this a little bit bigger. Here we go. 25, 27. Okay, yep, that's 25 ticks. All right, so I say that because I was watching a Bridger Pennington, and what he does is help people create hedge funds. And one was basically all around trading, right? Ran a multi-hundred-million-dollar or billions of dollars under management hedge fund for trading. And he was talking to him and he was saying, hey, look, he was talking about his automation, and he said it took a trade at 1:30 this morning. Look, this trade, it's a beautiful trade, ABC. And I'm expecting him to talk about 100 ticks, 100 pips, 50, 200 ticks, something like that for that trade. And what he said was, it's a beautiful trade. It was a 20 pips. It was 20 ticks. Not greedy. That's all we're really looking for out of the market, out of a great opportunity. We're looking for 20. And it made my jaw drop because I was always thinking that those guys want hundreds and thousands of ticks and pips and everything, every single move. But that's not the case. So I want you to change your mind frame and say, hey, look, 20 pips, if it's good enough for a $100 million, billion dollars under management hedge fund, 20 pips is good for me. All right, 25 pips is good for me. And the thing about it is, trading is about how big your account size is. And that's it. It's about having an edge and having a big enough account to make sure that it's paying you what you will want it to. And the great thing about it is, if you're consistent with your edge, doing the same thing over and over again, no matter what, eventually you will get there. You will get there. Have the edge, have the skill set, have the discipline, and the money will follow. The capital will be in that account. If it's not yours, it's plenty of people wanting to get that type of that type of income. Okay. So keep that in mind as we're going through this, okay? So 9 o'clock in the morning to about 11:30. Most optimum time, most moves happen around that time, happens quickly, and it happens well, okay? When we're looking down here, the way that this ADX is set up, this is inside of the house, right? There's a black line right here, down here, and this is the threshold, right? So this is the house. If both of them are in the house at the same time, right, and nobody's outside of the house, guess what? The market is going to be flat. So you see, both of them are in the house. The market was pretty much consolidating through here, right? As soon as somebody jumped out the house, right? The sales down, that jumped out the house. Guess what? It jumped out, right? So same thing here. It jumps out here. Great. Does its thing. But in the meantime, while this was out the house doing its thing, guess what was going on? The buyers were in the house. They weren't doing anything. They were dead, right? Same thing happened again. Buyers are dead. Buyers came out of the house. Sellers were dead. All right. That's how you read that. Cool. Very, very simply. At the same time, you got the top-down analysis from the 2 hour all the way down to the 1 minute, letting you know if we are going up or if we're going down for the time. All right. So we are going to go right to 9:30. We're going to go through a bunch of different days, and we're going to see the same thing happen over and over and over again every single day. Okay. Every single day. It's not going to be the same, exact same prices. It's not going to be the exact same things, but opportunities are going to be there every single day to get that 25, 26 pips. Okay. So I lost my little box. I'll make up another little box real quick. 431. And we need oh 06. Perfect. Oh 06. Yep. There we go. That's 25 pips. 25 ticks. Ticks. There we go. Just so we can visibly see what that looks like here. All right. Without having to measure over and over and over again. All right. So here is the first thing. So the system is this. We have orange and blue. These are a breakout zone. One of the two breakout zones that are here, right? The other breakout zone is this hazy white. I'm going to fill it in just a little bit more so you can see it visibly. But this hazy white is another breakout zone. Transparency will make this 2. And you should be able to see it. There it is, right? So that is the other breakout zone. And if we go back here, we see the X's are at the edge of this breakout zone. So these X's are for this hazy white. And you can visibly see black X for down, blue X for up. And you see 20 pips come out of here very, very quickly. 167 there. That's 930, right? And then we got 1030 came back up the other way from 154. Now, this is a heavy news day. This is an NFP, so this was just going absolutely crazy. Even right here is about 20 pips. Even that smallness right there. Up here, back down, bang. 123 here. And then this one as well, 60. So you can very easily see what that looks like. So we'll do with this one first. All right, 930. Where are your breakouts? Right here. Here's one. How much is that? There's your 20 pips. Perfect. Came back down here. Here's 27 pips there. Later on in the day, 12 o'clock p.m. Here's another 31 pips there. So did you get your 20? Absolutely. This is 930. First things first, came out right here for you. Right. Where did it start buying? It started buying way back here. Okay. Way back here. Cool. Let's go to the next day. Each and every day, you're going to see this happen. Now, it might not be during the time that we want it to be every single day. So we have backups for that, right? So here's 930. There's 48 right there immediately with a TP. Came back down. Another 28. But we really want to focus on the buys. Here's the rest of it. 240 right there. So that's another winning day. If you were doing just this, you would be absolutely fine. This is a little bit before 9:30, 9 o'clock. Remember I said 9 to 11. Or if I said 9:30, no problem. If it's after 9:30, here you go. Here's your 20, 50 pips right there, right? That is at 11 a.m. Right? So there you go. There you go again. And there you go again. Cool. Next day. All right. Where did it go? Right here. Bang. 75 pips. That's 10 o'clock a.m. All right. This hopped out for a little bit and hopped right back in. Right. Hopped out and hopped right back in. Didn't do much, 18 pips right there. Um, and that's all right. All right, here you go. 58 here. A little bit more than that. There you go, 135. Keep that risk management nice and tight, and you would have been absolutely fine. Later on in the afternoon, it went again, and that's great. So that's a good day as well. 9:30. Here's a little sell out of there. Peeled back. Worst case scenario. What did it do? Let's actually do it like this. It peeled back 77. Well, it said TP right here, so that's good. It did go 20, 24. It did its thing. Did 24 and then peeled back. Worst case scenario, it peeled back 115, came back, did it again, peeled back again, and then finally went at 11:30. All right, 11:30. So keep risk management tight. Absolutely. Here's 9:30. And that's what that would have looked like. Okay. Um, Next day, put this back. And here we go. 9:30, buyout, 36. Sell out, a lot more. Done. So I'm being extremely repetitive because as soon as it becomes like completely mundane to you, that's when you'll be able to execute it over and over and over and over and over again, right? Over and over and over and over and over again. So that's that. So now what we'll do is go into the next one. So let me actually make this faint again. So now that you know what you're looking for, that's perfect. Um, Here we go. Transparency. Let's make that about an 80. All right, solid. So now it looks really, really faint, and you just see the X's here. Okay. But it's there and you know what you're looking for. All right. Next, here is the other breakout zone. So these two lines, light blue here, and then oranges, red right there. And when it's jumping out of the top of it, buy. When it's going out of the bottom of it, sell. Okay. So here we go. 9:30. Here's your sell. 84. Here's your buy. As much as 388. Crazy. TP's on the way. 1, 2, 3, 4, 5. 6 TP's on the way. All right, let's go to the next day so you can see what it did. Now we're going back over the same days that we just did. Same days that we just did. And yeah, we'll go from there. So same days, let me actually, now these don't have X's on them. So you're just gonna see them. But we can always set alerts for these as well. So you'll have alerts set up for the X's and you'll have alerts set up for um, these breakout zones too, right? So whatever is happening is giving it to your phone and you're getting the text message. So here's first 70 pips or 70 ticks up to the TP, no problem. And then it came back down straight to this line, peeled up just a little bit. That's 15 pips pullback and then jetted for another 69, another 131, and all the way down here. But that's a great, great entry for this 194 here. and you're just floating. You're just floating there. Okay. What do we need? 20 pips. You're fine. So that's that day. Sold up, two different moves. Next day. Now, nothing happened this day for this. Why? Because it happened early. It happened at 5:30 in the morning, right? Breakout here. You would have got a text at 5:30 in the morning. And then it just sold for 698 ticks. 698 over the course of 7 hours. Right? So that's what that would have been. So nothing was here for this, but we did have backup, and that was the day that we jumped out right here for 234 for the rest of it. Okay. Next day, what do we have for it? 9:30. Perfect. Close that off. 9:30 is here. Looked like it was going crazy around that time. And this is what we saw. So we got it to sell here, 65. We got it to buy here. It bought here. That's 24. That's your 20 pips. Sold back into here and then jumped out again. 112. And that was sooner than the other breakout right here. So 30 pips early. It let you in, right? Peeled back down, came back up again. Bam. Another 57. Peeled back down just for a little bit. 16. When it peels back in, get out, right? Peels back in here, just get out. You don't have to worry about that. Okay. So come out here and then it comes back in, just get out. No worries. Then it would have came back up here and you would have been back in profit again, 47 there. If you didn't take the money and it came back, just get out. Then it would have came back down here. And look how much sooner, 87 pips sooner than the other breakout. See that? 87 pips sooner. This is 12 p.m. Bam. 221 altogether. Here's your TP as well, right? So you can see how you can map that day out. Next one, see 9:30. Oh, this must be a Saturday. Okay, that's a Saturday. Here's Monday. Bang. Repetition is the father of learning, right? 9 o'clock, 9:30. Here we go. Peels into here, comes back out, shoots down. Day done. 164 TP. Beautiful. Right? Beautiful. Out of there. 276 if you wanted it. Right? Comes back to it, peels back into it again, peels back into it again, and then sells down again for another 117, all before noon. Peels back into it again, comes back down again, 103. Okay, so that's that day. Next day, 9:30. What do we look like? We're dancing around the top of here. And it looks like a buy right away. 125 very quickly, hit a TP, came right back to it. Get out if you didn't take the money. And then we see what? Let's sell back into here. That's at 10 o'clock. 37, way more than 25. Great. If it comes back to here, get out. Come back here, back up, and we are off to the races. 314. And again, we are very, very early, 76. 77 pips or ticks before the other breakout. We got one, two, three TPs right here. Right? Perfect. So when passing a challenge for these prop firms, you can just use one. You can just use one contract if you're on the 50, two contracts if you're on the 100, and three contracts if you're on the 150. Keep it very simple because there's so many ticks that are being put out. You'll be able to pass that stuff no problem. What you don't want to do is give yourself an aneurysm trying to make sure that it goes right away, right? And risking all your account and stuff like that. So as you can see, it's gonna go. If you have a lower risk, you will be relaxing while you're doing it. And that's the whole point. Just relax while you got this done. So 67 here, it really lets you know early that we're about to buy way back here, right? And it did all of this. But again, 66 there. If you didn't take your money, no worries. Did this again, 24 pips. If you didn't take your money, get out there. Then it comes here, sells down, bang, 57 there. If you didn't take your money, no worries, get out. It does this right here. No, it actually comes here and sells back into here. Now that could be a fake out. That is a fake out right here, right? Just get out as soon as possible. And when you do, you got this again anyway. Now you're right back into profit. Fake outs happen, but you could have been done right here or right here, right? Could have been done. Again, 20 pips is plenty. That's 60 and another 25. And before that, another 56. So if 150, 120, 140 ticks was not enough, then you will get faked out. And then you'll have more opportunities later on too anyway. Okay. So that is the second one. So we went through all of those days. As you can see, this is how you can win every single day. No problem. Here's the next one, 9:30. Again, yesterday, this is what it looked like. 9 o'clock came here, 9:30 came here, and we sold out of here. There it is, 167. And then we came back up in here. Yeah, another 61. And before that, it dove back in here. Or got back to it, tapped it. Or if it did tap it, and then it came right back down for another 120 before it did all of that. So perfect. Now we got two ways to make money every day, right? So it was repetitive for a reason, just so that you guys could see it over and over and over and over and over again. Okay. While that's happening, you have these things showing you what's going on, right? That's what it looks like. Bang, bang, TP, giving you more than enough time to take it. Um, on the replay, this goes away, but just know that that's going to be there for you. Now for the third option of how to make money here, if neither of those two are there, then you do much more risky, much more risky, much more fake outs, right? But another option is, let me actually move this out the way. Another option is this line, right? This line is good for crossovers. These little arrows are there for that. Now these arrows, they flicker a lot. They're gonna flicker. They're gonna go on and off and on and off and on and off. They're gonna be there. They're gonna go away. All types of stuff is gonna be happening with that. Um, so If there is nothing else that you can do, right? This is a possible option. You see how that's flickering and peeling back and everything? Make sure you're using a very low lot size if you are going to be doing these crossovers. Okay. If you're going to be doing these crossovers, because this is a higher time frame, um, make sure that you're using a lower lot size if you're going to use these crossovers. These little arrows are telling you when it's crossing over that line. It's a very significant time. If we look back, it always plays with this line. This is not an SMA, it's not an EMA. It is a regression line with a bunch of different calculations in it at the same time. So it's not operating as an EMA or SMA or a weighted moving average or even a VWAP. It's not any of those things. Okay. Um, so it's always going to come back to this line, or this line is going to come to it, right? See, I was way far away, but it caught up with the line and accumulated here, right? During this time of accumulation, where it's not really breaking out one way or another, and both of these are at home at the same time, as you can see, so many fake outs are happening. But during this fake out time, this is when this is kind of going in, right? So if we're looking, this line is letting you in over and over and over again. For 10 pips, 20 pips, right? You saw this one just now, that was about 20, right? 17 pips there. And did what? Came back to the line. Came back to the line. There you go again. A few bucks, right? Then what? Came back to the line. Did what? Crossed back over. So this is when you're just scalping back and forth. Do you have to do this? Absolutely not. Is it here? It's here. But as soon as you go into profit with this, just take the profit, right? This is a very low volume time right here. No, we don't know when it's going to break out. This is 11 p.m. You shouldn't even be in the market at this point, but this is what that is. Okay. That's what that is. This line does that. Now, at the opportune times, at the correct times, it's going to look a little bit different. It's going to look pretty good. It's going to be significant. You should want an alert. You should want an alert going off when this is crossing that line, right? As you can see, let's just look at the last few days through this lens. 79 here, came back down. 85 here, came back up. 44 here, came back across, pulled up, pulled down, whatever it is. 28 here. So let's see what it really looked like. So that was that great move there. That's flashed down crazy. You see how it's going away and coming back and going away and coming back. Here's what these things would look like. Should stop right here.